It is September the 23rd, 2023, Saturday. So my account settled. That is, the options that I had sold for last week either expired without being exercised or by being exercised. The underlying stock, HanesBrands International, HBI, has moved down toward the bottom of its trading range, which means that at some point it'll go back up, as it always does. The only thing clouding HBI right now is the fact that an outside investing group is putting a lot of pressure on the management to do better returning value to the stockholders. And I think rightly so. The management obviously has done a poor job. And part of that is a problem with the corporate structure. The top dogs in the organization get paid usually based on their bonuses are based on share prices. So in order to bump their pay up, they'll acquire or start new firms, which the success of which really depends on how closely it lies within the expertise of the parent company. You would think that the ventures that the management has done, particularly Champion brand, is a good deal and fits all the criteria for a good effort or campaign. I don't know enough details to judge that, but whatever it is, it's not done well for the stockholders. So there's rumors that HBI will try to spin off the Champion brand into another corporation or sell that brand outright. I don't know whether they will or not. But the goal is to reduce their debt level, which I applaud. The good news about all that is that we're likely to see a little bit of an increase in premiums paid for the options I sell, which is really necessary when you consider the low price of the stock versus the 50-cent increment of strike prices. I've got a piece on my website about that. I'll try to provide a link to that down in the description section under more. Okay, let's get to business at hand. Well, this week, because I'm in stock, and that stock is marked to market, and the current price of that stock is $4.19. I've taken a large unrealized capital loss. It's really important to understand what the importance of knowing what or understanding unrealized capital losses or gains versus realized losses or gains. So I want to dwell upon that just for a minute. I guess the easiest way to gauge my success in this business is how many contracts I can sell. That is, how many can I cover? Of course, if it's puts, if I got cash, I'm going to be selling puts. If I have stock like I do now, I'm going to be selling calls. Now, in getting back to the realized versus unrealized capital gains or losses, until this stock is called away from me through the exercise of a call, these losses are just on paper. When the stock is called away, then those capital losses or gains are realized. So, but anyway, free cash flow is what it's all about for me, because this is an ongoing enterprise, not just a single transaction. So it's ongoing. Now, as I covered in some detail, I've been disappointed this year in the results. Best I can determine on a revenue basis, I'm seeing about a 10% return on my investment, which is about half of what I usually get. So I'm not pleased with that, but at least in this turbulent market and falling stock prices, I'm making some money. To illustrate that point, if you look at here at this screen, I've got 2,900 shares of HanesBrands International. My average cost is $5.01. The current price is $4.19. So I've got a unrealized capital loss of $2,392. Now let me change my view here. Now you see the transaction set that just was settled. And for this period of time, I've collected $3,415. So even if I sold the 2,900 shares of HBI and took that $2,392 loss as a real loss, I've collected enough revenue to either replace that or at least to mitigate that. So anyway, that's the beauty part about being a seller of stock options. As long as the underlying stock is good, you're okay. So my challenge now is to place orders, which are going to be calls. And as you can see, the premiums as of the close on Friday are mighty poor. But I'm expecting the market to go back up because it's reaching the low end of its trading range. For that reason and no other reason only, it's a technical trading thing, which doesn't make any difference whether technical trading is true or not. If enough players believe it is, then it becomes a self-fulfilling prophecy. So let me just leave it at that. But at any rate, I'm not going to settle for that. I want to go to $4.50 call price. And also, I'm not going to settle for 5 cents a share. I'm going to go for 20. And because it might not get filled the first day, I'm leaving it good till cancel. Now, there's many other plays I can make on this. If it's not called away, but the price rises some, I may at some point elect to just sell the stock outright. That's not likely. But at any rate, I'm just going to sit on the stock for a little bit and wait for the cycle to reverse and go back up. So that's not bringing in a whole lot of money, but it's, hey, it's $580 into my account that I wouldn't have otherwise. So we'll place that order. And it's done. All right. Thanks for watching. If you like these videos, please hit like and subscribe. It would be greatly appreciated.